Hi, I'm Nick Fenton with TickerTank. We have just released a new options trade. For our options trading system, we're going to be selling to open the Apple AAPL September 2010 230, 240, 270, 280 Iron Condor at 4.00 credit. So that is a credit of 4.00 to your account, which equates to a $400 credit per spread that you enter. The legs on this spread, here's the breakdown. We're going to be buying the 230 put at 2.75 debit, selling the 240 put at 6.25 credit, selling the 270 call at 0.75 credit, and buying the 280 call at 0.25 debit. Add all that together and you'll get the 4.00 credit that you'll receive to your account. Here is the risk plot profile for this trade. Remember, the stock price is right along this x-axis here along the bottom of this blue chart. The y-axis represents the profit or loss on this trade. So basically this chart represents the profit or loss on expiration day of this trade. Now Iron Condors have 4 legs, and you can see all 4 of these legs and the strike prices associated with them here on this chart. Here we've got the 230 leg. Up here we've got the 240 leg. All the way over here we're looking at the 270 leg. And right down here we're looking at the 280 leg. Notice how our profit and loss line changes at each strike. So you can see at 230 and below we incur a max loss of $600. Now between 230 and 240 our loss moves towards 0. Then we can see our break-even point right here at 236. And as we move up towards 240, we're making more and more until we reach that sweet spot between 240 and 270. Now the sweet spot here is our max profit zone. This is where we want to be. So on expiration day, we want Apple to be trading anywhere between 240 and 270. Then we'll have our max profit, which as you can see here is $400. Now as we move higher than 270, you can see our profit starts to decrease until we hit that upper break-even, where again we have break-even price. So if Apple is at 274 on expiration day, we make and lose nothing on this trade aside from commissions. And above 274 we start to lose money until at 280 and above 280 we max out our loss at $600. So for this trade, remember 240 through 270 is our sweet spot for max profit, and anything at or under 230 is max loss. Anything at or above 280 is max loss. So let's take a look at the stock chart, and I'll highlight our sweet spot and break-even points for you. Alright, so here we're looking at the 9-month bar chart for Apple. Up here at the top, we've got the price action for the stock. Below that, we have the stock's volume for Apple. And then below that, we have RSI, which is the Relative Strength Index. First thing I want to point out is that Apple's price action has been trading between 240. Here we've got consolidation support right here at 240 and consolidation resistance 270. So we've seen a nice sideways range-bound trading pattern here in Apple. Hence the reason we chose the 240-270 max profit range. So we'd mentioned our September expiration is at September 17th. Max profit range on the September 17th expiration is right there, highlighted between 240 and 270. We've got our lower break even at 236, right around there, and then our upper break even at 274. So you can see we've got a nice wide range that exceeds above and below consolidation resistance and support respectively, and then our max profit range is right here in the heart of this consolidation range. Right now Apple has pulled back to consolidation support. We're anticipating a bounce off of this consolidation support, which will push it back into this range and hopefully push it, keep it in this range into September options expiration. One thing to notice is there hasn't been any significantly large volume on the downside moves here in Apple, which doesn't alarm us to potential downside continuation through this consolidation support, meaning that we we think it will pop off of this consolidation support level. Furthermore, we're right here at 30 in RSI, the relative strength indicator. A push at 30 indicates that the stock is oversold and due for some buy side momentum. So, that just gives us a little bit of confirmation that we should see a nice bounce off of this 240 consolidation support level. Lastly, I want to point out that this orange line here represents the 200-day exponential moving average. And in the event we do get a little bit of a push through this consolidation support, thinking that this 200-day exponential moving average will provide some nice secondary support and help push it back into this range prior to the September options expiration in Apple. If you have any questions about this spread, feel free to email me at nick@tickertank.com. Also, if you need assistance in setting this spread up so that you can execute this trade, feel free to email me or call your broker and ask for the options specialist, and they'll happily walk you through it.